Hello, everyone. Thank you once again for joining us today, and welcome to this specialist trading presentation. My name is Steven Primo, and I am the founder and the president of SpecialistTrading.com. Now, for those of you who aren't familiar with my website, Specialist Trading offers unique education and courses in trading the stock, E-mini, and today, as you'll see, the Forex market. So basically what we offer are insights, wisdom, and trading strategies from the floor. Just to give you a little bit of background about myself, I really came from the floor. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through a number of different environments, different markets. I traded through the crash of '87. I traded after that, the bull market that ensued after that. I saw a lot of things happen in the market, just about seeing everything. And I left in the mid-'90s to manage money, to trade my own account. And since then, I pretty much traded every market. I've been the director of education for a number of financial sites. And in the last 2 years, I formed Specialist Trading, where all I teach and all I share with you are my own specific methods, things that I learned from the floor and things that I use in my own particular trading as well. Now, I know a lot of students and new members that we have on our website always ask, well, Steve, if your background's from the floor trading stocks, how is it that I'm taking or you're giving Forex courses? I just want to tell you that everything that I learned is just really based in simplicity and a sound foundation, and it can easily be transferred over into any market, any time frame, and most especially, in my opinion, the Forex markets, because I'm basically a trend trader, and the Forex markets really, in my opinion, once again, have the best trends out of any market available. So this is where I really think my methods and techniques really stand out with the Forex market. So what we're going to be doing and talking about today is I'm going to be sharing with you a simple way to achieve success with candlesticks. So many people trade candlesticks. They trade them in intraday trading. They trade daily trading. I'm going to show you a simple pattern that I'm sure you've all heard of, and I'm sure probably most of you use, but just show you ways in which you can heighten your success. And then I'm going to actually share with you a strategy that we've built off of this particular method or this particular technique, and you'll see the results and you'll see some current examples. I'll show you some of our positions that are currently in the market as well. So get out your pencils and paper, because I'm going to give you a lot of information. But before we begin today's presentation, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results with the candlestick pattern, as well as the techniques I'm going to be sharing and the strategy. But please remember that we can in no way guarantee that any of these performance results will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also want to bring up a few things. The way I like to teach and give presentations is I like to save questions for the end of the presentation. I know a lot of you like to ask questions during the middle or while the presentation is going on. I know a lot of teachers like to teach that way. I prefer the other way, where we save everything towards the end. And I guarantee you many times questions you have will be answered as you see the presentation go along. So if you wait a few slides or a few minutes, your question will be answered. So please wait till the end. I know even though I say this, people tend to always ask questions, and I'm just going to have to refer you back to please wait to the end. Write your question down. I'm going to reserve the last 15 or 20 minutes just for questions. If we happen to run out of time, don't worry. I will give you an email address as well as a phone number where you can contact me and we can answer any questions you may have, okay? So please just wait till the end. I'd rather spend most of my time teaching you than answering questions that are probably going to be explained in the presentation anyway, okay? So with that out of the way, also I want to state that I know that we have so many traders in the Forex markets. As I said, I started out trading stocks. I graduated and moved over to trading futures. And now I really focus a lot on the Forex markets because there are so many Forex traders, Forex investors. But just like every other market I've taught or traded, people seem to be making the same mistakes. People seem to be having the same difficulty, and it easily transfers over. It doesn't matter whether we're talking about currency pairs or whether we're talking about E-mini futures. It's really your mindset and how you trade. And the reason I'm saying this is because I'm right there with you. I went through years of really difficult time trading. Even when I was a specialist on the floor, I had a difficult time trading. I would have some great months followed by disastrous months. And so I really know what it's like to go through a period where you feel you have nothing to show for all your hard work. It's very frustrating, very discouraging, and your account is slowly dwindling away. And it wasn't until I came in contact with a few elite traders on the floor, these were specialists, other specialists as well, that really turned my trading around. They turned my thinking around. And they shared with me the specialist edge. And the specialist edge is really not anything about some new technique or some new indicator or some way to get advanced information on news, but it's really more about stripping those things away. I'm sure a number of you have gone to my presentations before on FX Street, and you've heard me talk about this, but it really is the philosophy behind everything I do, in that it's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. So my goal is to teach you how to simplify your trading, because after trading for so long, I've been trading, over 34 years really, and I've seen that for some reason people seem to think that the more complicated they make their trading plan, the more indicators, the more chat rooms or trading rooms they belong to, the more people they listen to or subscribe to, the better chances are for success. And it's actually the opposite, the other way around. The simpler you make your life, the simpler you make your trading plan, the less chat rooms you're in, the less news you follow, the less indicators you have, just the less markets you trade. Just keep it simple. You're really going to increase your odds for success. And this was the same thing that was taught to me. So my goal is to teach you how to trade with the specialist edge. And the specialist edge is simplicity. It really is simplicity. It's about stripping away all of the things that for some reason you've been taught will make you successful. I'm here to tell you that most of the time they don't. Actually, the reason why most of you are here is because you want an edge. You want to learn something because you've been having difficulty. And that's what I'm trying to do. After you've been trading for 34 years and you seem to be able to figure out how you have this level of consistency, trading actually can get kind of boring. And if you're doing it right, one of my teachers told me, if you're trading correctly, trading is very boring. So that's why I really stress teaching now, because I'm pretty much done with my trading in the first couple of hours of the day, and then the rest of the time I spend for teaching. So the two things that we really focus on as specialist trading are simplicity and consistency, because simplicity equals consistency. I'm not here to tell you that what I teach or all the things that I trade make millions of dollars a month, like some of the people may say or proclaim. We go into drawdowns, we go into times when the strategies aren't working as well as they should, but the main thing that we have behind all of our strategies is consistency. This type of approach where we're going 2 steps forward, 1 step back. And that really is the secret to success. And the way you get this consistency is through simplicity. It's not through adding a ton of indicators and not through adding a ton of chat rooms and trade rooms or listening to news. It's really by stripping those things and keeping those things to a bare minimum and really making your plan simple. So my goal is to teach you the simplicity through my techniques and knowledge and my strategies, and hopefully you will be able to have this level of consistency in your trading, because as I've stated as well many times, the secret to success is really not about making billions and billions of dollars. Success is being able to trade another day. I'm sure a lot of you have known that, who've seen your accounts dwindle down to nothing. You're frightened thinking that, boy, I may not be able to trade anymore. I have no more money. I know how you feel. I felt the same way. It wasn't until I found this edge of simplicity that my trading started to become consistent. So it's not about making millions of dollars. I know plenty of traders who I used to trade with on the floor who are millionaires, and now they don't even trade because they lost it all. So what did it matter that they had some great indicator or some tool that worked great for a couple of years but now has gone by the wayside? So the secret to success is consistency, and that's my goal, to teach you this. I'm not going to sit here and tell you that every trade is a winner. There's no way. Anyone who does that, I would be very skeptical of those people. I'm going to try and really persuade you to know that if you had this 2-step forward, 1 step back approach, that will keep you in the game much longer. Okay? All right. So enough of my philosophy on what specialist trading is. Get out your pencils and paper, because I'm going to give you a lot of information today, and here's what you're going to learn. I'm going to give you 2 edges. All right. The first edge is probably the foundation of everything in specialist trading. It's an edge that will keep you on the right side of the market. All right. So many times people will buy when they should be selling, and vice versa. This edge is a great simple tool that will keep you on the right side. And then the second edge is this pattern, this candlestick pattern, that usually has a very nice move, or a nice kind of continuation for the next 3 to 5 days, or if we're looking at intraday bars, 3 to 5 bars. So these are 2 edges that I'm going to share with you. Then we're going to look at some trading strategy results built off of these 2 edges, and then I'm going to show you some examples. All right, some examples that we are currently have had our members trading using the same concepts that I'm sharing with you today. Okay, so as I said, please, I appreciate it, and I hope it's not much of a nuisance, but if you have any questions, please save them for the last 15 or 20 minutes, okay? I guarantee you I'll answer them, and if we happen to run out of time, I will give you the email address or a phone number where you can contact me, okay? All right, so I want to start out with showing you this example, and also one of the things I want to say, most of the examples in the first part of this presentation will be older charts. I hate to go to presentations where they show me some great new tool or new strategy, and then it's on a chart that's 2 years old. Well, these charts are older. They're anywhere from 3 to 6 months older, but I'm showing these for educational purposes, just to show you how the concept works. Later on in the presentation, I will show you very current charts, as current as yesterday. Okay? But let's look at this older chart of the dollar yen. As you can see, we're in a pretty, fair decline here, a nice downtrend. And most of the time, people seeing something in a downtrend, they want to take advantage of these lower prices. So let's say that you belong to some chat room or you subscribe to some newsletter, and they say that the dollar yen can't go any lower. You've got to buy it. So it starts to form a little base here, and then we have one up nice day. So you want to take advantage of that. So you jump in. You buy the dollar yen, and then lo and behold, by the end of the week, it's making lower lows. Does it look familiar to anybody? Has that ever happened to anyone? Or what about this example? Here's an older chart of the British pound. British pound is in a very nice sustained uptrend, okay? But you think it's too overbought. Perhaps someone you watch on TV or some indicator you have that you swear by is telling you that the British pound is way too high. It's in tremendously overbought territory. There's no reason it should be this high, so you have to short it. So you start to see it roll over. There's a little crack in the armor here, so you want to take advantage. So you go short this day, and things look pretty well for you. You're short, and you think it's really going to fall out of bed, and then look what's happening. Very next week, it's flirting with the old highs again. Does this look familiar at all? This is probably the number one problem with so many new traders and new investors. They're on the wrong side. They should be selling when they want to be buying, and vice versa. Well, what if there were a tool or a technique that could really have high probabilities for letting you know what side to be on before you make the trade? And there really is, and it's extremely simple. It's our buy-sell line. This is our first edge we talk about. As I said, this is the cornerstone of everything at Specialist Trading. Every strategy, every technique is built upon this buy-sell line. And it's extremely simple, but extremely powerful. And for those of you who have gone to my webinars before, you've heard me talk about this, but I'm sure if you've used it in your own trading, you'll see how it really helps you. And all it is the 50-period simple moving average. But in order to use this tool properly, I want you to plot a 50-period simple moving average on any chart, on any type of trade you have. I don't care if it's a 5-minute chart or if it's a daily or even a monthly chart. Whatever you're looking at, whatever your market you're looking at to trade, plot a 50-period simple moving average. And here's how you use this particular tool. What you want to do is ask yourself a question. And you have to ask yourself this question in order to use this tool properly. But you have to ask yourself before you make the trade, and that is, where is price in relation to the buy-sell line, or the 50-period simple moving average? Okay? I'm going to say that again. You may want to write this down. Where is price in relation to the buy-sell line? Because you're only going to come up with two possible answers. If price is above, then you're only going to be looking to buy, or in other words, looking for buy setups or buy signals. If price is below, you'll only be looking to sell, or for sell setups or sell signals. Remember, I talked about how simple things should be. It can't get any more simpler than this. Now let's look back at those same charts we looked at earlier. Okay, here's the dollar yen. Once again, we had a sustained downtrend, and we thought we should be buying. But look what happened. It was the wrong thing to do to buy. Well, what if we had plotted the buy-sell line? All right. Now we ask ourselves, where is price in relation to the buy-sell line? Well, price is obviously below, so you can see now that you have that information, there's no reason why you should be thinking or considering buying the dollar yen in this example. All right. How about the other example of the British pound? We originally thought it was far too high. It had gone up too quickly, and it was in tremendously overbought territory, so we decided to sell. And obviously it was the wrong thing to do because it went right back up to the old high. Well, we apply the buy-sell line, okay? And we ask ourselves, where is price in relation to the buy-sell line. Obviously, price is above the buy-sell line. So this means we shouldn't even be considering going short. We should only be looking for buy opportunities, okay? So do you see, once again, going back to what I first started this presentation with, talking about simplicity. This is a tremendously simple tool, simple method, but I would guarantee you that the majority of traders know about it. They've heard about it before, or maybe it's some other moving average, maybe a 200 period or even a 20 period moving average. But I guarantee you the majority of traders don't even use it or apply it because it's too simple. Once again, we've been taught that the more complicated you make something, the more your chances are for success. And it's the opposite. You really are going to increase your odds for success if you apply this rule each and every time. I don't care if you're trading a 5-minute chart or a monthly chart. In fact, I want to give you a little assignment right now. I want you to look over your past 10, 20 trades, 10, 20 trades that you've had, whether they're successful or not, and see how they were in relation to the buy-sell line. I can almost guarantee you that the majority of your losses were because you're out of sync with this, okay? So you can use this. This applies to any market, any time frame. This is a great tool, simple tool. Once again, the foundation of everything we use at Specialist Trading, okay? Doesn't get any simpler than this. All right, let's go on to the second edge. Excuse me. Now we're getting into the gist of the presentation, and this is where we're talking about candlesticks, how using candlesticks, simple pattern can really increase your odds for success. Now I know that the majority of traders use candlesticks. Candlesticks are just a different way of viewing what's going on in the market. They're a great tool. I use them myself. I don't use them for each and every strategy we have, but in a couple of particular strategies I do use them. And I mainly focus on this one particular pattern for probably our most consistent strategy. And this is the pattern that I would say 99% of all traders know about. It's a bullish and a bearish engulfing pattern. And I just want to review this pattern for some of the beginners or some people who may not know this, because there's nothing wrong with that. It wasn't until I started studying candlesticks that I found out about them. I wasn't aware of them at all either when I was on the floor. But a bullish engulfing pattern is, as the title says, a bullish sign. There's usually a propensity, once you see this pattern, for the market, whatever it is, whatever time frame, to move and continue moving in that direction of the last bar of this 2-bar pattern for the next 3 to 5 bars. And what we want to see is a 2-bar pattern here. The first bar should be a dark body or a down day. In other words, we opened here and we closed lower. This is a dark body right here. The next bar in that 2-bar pattern should be an up day or an up body or a clear body, meaning that we opened and then closed higher. But what we're doing is we are engulfing the prior day's not entire range, but the range from open to close, or the range of the body. What a lot of people, the students, have a misconception is they think that we have to totally engulf the range, the top and the bottom. As you can see here, we're not engulfing the prior day's range. We're just engulfing the prior day's body, down day. Okay? So that's all we're looking for. Once we see that, as I said, there's a high chance, there's a high propensity for us to continue in that trend direction of the last bar, which is up, for the next 3 to 5 bars. Now, this can be a monthly bar chart. It can be a daily. It can be a 10-minute bar chart. It doesn't matter. It's a great tool and a great edge. Now, the same thing works for bearish engulfing patterns. Same exact concept, but now we're looking to go short, or if we're looking for the trend to continue as the second bar in this pattern to go lower for the next 3 to 5 bars. Once again, the first bar in this 2-bar pattern is an up day, or has a up body or clear body, meaning that we opened lower and closed higher. Now what we want to see is the next day we open and then close lower, and so this dark body totally engulfs the prior day's body from open to close. Not the entire day's range from top to bottom. We don't care about that. We just want to see that this dark body engulfs the prior day's body. That's it. Okay? And if we find that, there's a high probability that since this was a down move, the second bar in the pattern, there's a high propensity for the next 3 to 5 days to be going lower. This is a tremendous edge. I'm not going to promise you that it worked 100% of the time, but in trading you need small edges like this to give you that consistency. And it can't get any simpler than this as well. We have the buy-sell line simplicity, and now we have the simplicity of probably one of the most common candlestick patterns around, the engulfing pattern. So now we combine those two, okay? So what we want to do is, if we have a chart, we switch to candlestick pattern charts, and then we apply the buy-sell line, the 50-period simple moving average. Once we see that price is above, then we'll only be looking for bullish engulfing patterns. Once we see that price is below, we'll only be looking for bearish engulfing patterns. Let me show you what I mean here. Here's an older chart of the Australian dollar. We ask ourselves, where is price in relation to the buy-sell line? Price is above. So this means we're only looking for bullish engulfing patterns. We're not even going to concern with picking a top or thinking that something is too overbought because some commentator told us to short the Australian dollar. We don't listen to anyone else. We just listen to the only thing we should be listening to, and that's the market. And since the market that we're tracking, the Australian dollar, is above the buy-sell line, it's basically telling us that the odds are I'm going to go higher, so why don't you jump on board and come with me? So we want to look for signs on where to jump in, and here's a sign right here. Here is a bullish engulfing pattern, all right? Bullish engulfing pattern, its very name is saying it's bullish. We're on top of, or above the buy-sell line, so this is a sign telling us that the trend will probably continue higher. And it continues higher for about another 4 bars and then consolidates. And then later on, we see another one here, later on in the month. Okay? The trend, once again, resumes about 3 to 5 days and then consolidates and goes sideways. So you see how simple that is, all right? I'm not going to sit here and tell you that it always works, but you just put 2 edges in your favor so that you can go to this road of consistency in your trading, as opposed to what I think most traders would be doing is looking for a way to short the Australian dollar right here, looking for a top. I can't think of a better way to lose all of your account than by trying to trade tops and bottoms. And trust me, I know firsthand because I almost lost it during the crash of 1987 when I tried to pick a bottom. So it's very difficult. I know there are some traders that do trade this way, but it's very difficult to teach what they're seeing. Most of them are just going off of feel. And a lot of them, do tremendously well, but it's something that you can't teach. And I only want to give information to people and students, things that I can teach, not things that I feel intuitively. All right, now here's an older chart of the dollar Swiss franc. We ask ourselves, where is price in relation to the buy-sell line, the 50-period simple moving average? Obviously, price is below. So this means we are not at all in the world going to look for picking a bottom. We don't care. We're going to look for jumping in with the river. If the river is going downstream, we don't want to swim upstream. We want to go with it. And why would you want to waste your time and effort and strength trying to go against this powerful river? Just jump on board. Just jump on board. There's room enough for everybody. You're not stealing any money from anybody or making someone a loser. There's room for everybody to jump on. That's how powerful the Forex markets are and their trend. So what we're looking for now are bearish engulfing patterns. All right, as we see right here, we have a very nice one set up. And see how the trend continues lower once we have that set up. Now here we have a bullish engulfing pattern. And right here, someone may say, well, you know what? We've had a tremendous, downswing in the dollar Swiss franc. I'm going to take advantage of this and buy because we have a bullish engulfing pattern, okay? Now look what happens. The market really doesn't do anything. It maybe goes a little sideways or goes up a little bit, but you would have had to been very quick and had a really tight exit procedure in order to take advantage of this particular trade. But this is why I'm telling you, it doesn't mean that just because there's a bullish engulfing pattern doesn't mean it won't work. But why take the odds and the chances that are against you of trying to make it work when it's much simpler to simply take a trade that is going with the grain, as we have here. Much easier to go with the trend. Excuse me, here's another example. Bearish engulfing pattern, the trend continues even lower. We have another example of a bullish engulfing pattern. Once again, someone could have said, well, it didn't work before, but I'm going to take advantage of this now and try and pick this bottom because it's got to be bottoming now. And look what happens. It goes even lower. And right here, we actually did make a bottom, but who cares? I mean, we're not in this business to try and pick every top and every bottom. I've been trading long enough to know that that's a sucker's bet. It's much simpler, and you're going to be having much better sleep at night if you just go with the trend. Now, this concept works. I've been showing you on daily charts. This concept works in any time frame, in any direction. Here's a 1,000 tick bar chart of the dollar Swiss franc. And in fact, this was just from this last week. This was actually the 14th. I'm sorry, this was actually yesterday. The Swiss franc had a really nice up move, and you can just see that the trend is moving very nicely to the upside. Now, a lot of traders would have been saying, boy, I've got to short this intraday because we're going up way too high. Much easier just to ask yourself, where is price in relation to the buy-sell line? This was yesterday. Once again, this is where I'm trying to teach you that this is not something where I show you, cherry-pick the charts from 2 years ago. This happened yesterday in the Swiss franc. We're above the buy-sell line, so all we want to do is look for bullish engulfing patterns. And you can just see here, they're all over the place, all right, telling you that the trend is most likely going to continue upwards. How about last week in the euro dollar? Here's a 4-hour chart of the euro dollar. First thing we ask ourselves, where is price in relation to the buy-sell line? For most intents and purposes, the price is below, and even though we pretty much kind of touch or to straddle it, we're basically below this descending buy-sell line. So we would view this more as a downtrend as opposed to an uptrending market. So we're looking for bearish engulfing patterns. And on a 4-hour chart on the 10th, I believe, which was last Thursday, look at this really nice signal that the market, I say the market, the euro dollar, was giving you. Not a commentator, not some chat room, not some weekly subscription service that you subscribe to, or not some tremendous, overpriced indicator that maybe you had to purchase. Just a simple tool like this. A 50-period simple moving average and a bearish engulfing pattern are telling you that the euro dollar is most likely going to be headed much lower. Okay? So as you can see here, this is a tremendous, tremendous tool that works in recent charts, and it also works, in any time frame and in any direction. Now, let's recap, okay? We're not by any means towards the end of the presentation, but I want to recap the 2 edges we shared with you today. And these are things you can start using as early as today. These are just edges, though. Now, first edge is the buy-sell line. That's a 50-period simple moving average. All right, and I want you to plot that on virtually every chart you have. If you like to trade 5-minute charts, plot the 50-period simple moving average. If you like to trade weekly charts, plot the 50-period simple moving average. And then ask yourselves, where is price in relation to that buy-sell line? You'll only come up with 2 answers. Because if price is above, only look for buy setups. If price is below, only look for sell setups. Now you notice this is labeled an edge. This is not a strategy. So many of my beginning students say, hey, price crossed above the buy-sell line, so I go long, right? No, that's not the way this is meant to be used. This is meant to get you on the right side of the market. It's not an entry technique. It's not a strategy. So once we find out if price is either above or below, then we begin to look for strategies, which is what I teach. But we're looking for setups to go long if price is above. We're looking for setups to go short if price is below. That's how easy it is. Once again, you have an assignment, your assignment for the day. Go back and look at your last 5, 10, 20 trades and see where your trades were in relation to that. As I said, I can almost guarantee that the majority of you losing trades were probably because you were out of sync with this simple rule. And then the second edge, very common tool and indicator that I'm sure 99% of you are familiar with already, which is the bullish or bearish engulfing patterns. When you see one of these, coupled with being on the right side of the buy-sell line, you usually have a propensity for the market to continue in that direction for the next 3 to 5 bars. Now, if those bars are weekly bars, that's great. If those bars are 10-minute bars, that's fine. But there is a high chance that they are going to continue in that trend. As I just showed you with those 2 charts we just saw with the Swiss franc on a 1,000-tick chart yesterday and with the euro dollar on a 4-hour chart last Thursday. So you see how the continuation will go. All right. So here's the points to remember. Extremely important, and I'm sure you were probably asking this already. This is not a complete strategy. What I've given you so far today is not a strategy, because a strategy comes with all of these other categories. You need to know about entries. You need to know about stop placement. You need to know about exiting. You need to know about money management. You need to know about all of these things. Now, at Specialist Trading, we've put together a strategy built off the 2 tools I've given you. We give you all the entries. We have a number of different entries you can place for conservative or aggressive trading. We show you stop placement, a number of different stop placements which you can use. We also tell you how you can move your stop to unchanged after certain actions and environments take place. We also give you exit signals telling you where to get out. And we talk to you about money management, which is extremely important. And once again, all of these things are so simple. I'm not going to sit here and tell you, well, you have to come up with this particular pattern, and it has to be something really complicated, and X must be contrary to Z. And no, it's so simple. You can learn it in a day. The hard part is implementing it, because once again, we want things to be difficult, and we can't, for some reason, understand how something can be consistent or successful being so simple. Not by listening to any news, not by being concerned with what other people are saying, just by learning how to listen to the chart. That's it. Don't waste your time and especially your money on these other things. You should just really focus on education. Now, as I said, the two edges I've shared with you today, we formulated into a strategy, one of our most popular and common strategies for trading the Forex markets and our most consistent. And this is strategy number 5. Some of you who are in the audience today, who may be some of our members, are familiar with this, with strategy number 5. This is a great strategy. It's really very simple and basic, built off of the things I gave you today for free. I want to share with you, after we've put together our entry techniques, after we've put together our stop placement, our exit, our money management, I want to share with you the trading results, just trading strategy number 5, going back 14 months from September 2010 to just last month, October 2011. And this is just from trading one contract. This is when we started issuing signals to our members 14 months ago. But please remember, past performance is not indicative of any future results. These examples are for educational purposes only, so we always suggest, especially attendees, to always invest wisely. Now, the results I'm going to be showing you, once again, are for every signal that we issued to our members. Now, we only issue signals in these top pairs here: Australian dollar, British pound, dollar Canadian dollar, dollar Swiss franc, dollar yen, euro yen, and the euro dollar. Now, this does not mean that strategy number 5 with the buy-sell line and with the bullish and bearish engulfing patterns does not work on other currency pairs. These are just the ones that we issue signals for, okay? And we issue those signals for educational purposes so that ultimately you'll be able to spot them on your own. They're really, we're an educational site. We're not about force-feeding you signals. We don't want to turn this into a trading room, because I really don't believe after my 34 years that you learn that way. Really what you learn is how to copy someone else trading. And I don't want you to learn that. You have to, we give you so many variables and different techniques and methods to formulate how you want to trade, whether aggressively or conservatively. Now, these results are from the most conservative, basic, generic way to trade strategy number 5. As you can see in the next column here, we have the amount of trades in that 14-month period for each of the currency pairs. The total trades for the last year and 2 months came out to 138 trades. That averages about 2 or 3 a week. Okay? Now here's the pips that was made in each particular currency pair. Okay? Now this is once again trading one lot, one unit. This is not trading a ton of different averaging up and increasing and compounding. This is trading, if we only traded one, how many pips we would have gained or lost. And as I said, some currency pairs do better than others. As you can see, the dollar yen didn't fare as well. Either did the euro dollar. We had a tough time in the euro dollar actually about 3 or 4 months ago. But even looking at those, every currency pair has been profitable in the last 12 months. And we have a total pip number of 4468, which comes out to about 320 pips a month on average. Okay? We'll talk about consistency. Now, if we were trading one lot, one unit, I know many different funds, and we have a lot of different groups that are large investors that have funds and have trading rooms. They use this particular strategy, and they trade more than one unit. But say you're trading just one, all right? Here's the dollar amount that you would have had going over the last 14-month period. It would have come close to $49,000. So on average, that's coming out to about $3,500 a month trading one lot. Obviously, if you want to trade the mini lots, you use this to divide by 10. Please remember, past performance is not indicative of future results. These examples are for educational purposes only, so please invest wisely. But this is going through each signal that we've issued to all of our members. Now, we issue these signals on a nightly basis when they do occur. As I said, you'll get about 2 to 3 a week. Here's a chart of the P&L chart. As you can see, we're talking about consistency. of all of the gains we've had. And I want you to see how well we've done coming up into this period. Here's where we had that very difficult time. Here's where the drawdown was. Okay, and I want you to please remember that. This is something that's very common. It's very typical. What we're not looking for in any strategy you have is to have this kind of roller coaster, up, down, up, down, up, down. It's okay to have these nice upward moves followed by moves of consolidation, and then hopefully we'll continue to go back on track. But as you can see, our P&L is still in the upper ranges of where we were at the peak of the P&L. All right, so let's look at September, October trading examples, okay? These are actual examples, and these were actual signals that we gave our members this past couple of months. These are actual signals that you could have taken advantage of if you decided to do that, or just watch to see how they unfolded. We always suggest to all of our members to paper trade. All right, here's the Canadian dollar. This was coming into the end of September, beginning of October. Here's a nice bullish engulfing pattern here. And as you can see, we issued a buy signal, and we made a quick 150 pips in 3 days. This was an actual example of a trade. Now, here's the Australian dollar going straight down. As you can see, we had a number of signals right here to go short. And they were all signals furnished and given to our members. Either they can come to a home page where they see the signal prior to the next day, or we issue them email alerts. And as you can see, you made 85 pips, 256 pips, and 179 pips. Now here's a signal we had in the dollar Swiss franc. This was the beginning of October. There was a bullish engulfing pattern, and in the next 4 or 5 days, we made a quick 107 pips. Now, later on, in the middle of this past month of October, we saw another chance to go long, so we issued another buy signal in the Swiss franc. And right now, to the layman, someone who's not familiar with this, or someone who likes to root against strategies and root against the different things, say, there's a loser. See, I told you this doesn't work. Well, just by face value, you would say, yeah, it looked like this was a losing trade, which happens all the time. I mean, once again, everyone's going to lose. You saw in the nearly 60,000 that we made over this, or 50,000, I should say, how we had that large drawdown. We still have average of $3,500 a month profit. But there will be losers from time to time. Now, if you wanted to trade this conservatively, as I said, we offer you different techniques and different methods. You could have used our conservative approach, and guess what? This trade, which appears to the layman as a losing trade, would have actually turned out to be a break even. So we teach you how to do these different techniques and methods if you want to trade conservatively. Now, here's another example of the dollar yen. Now, we had a really nice sell signal in the dollar yen last year, I should say last month, to go short. Now, once again, we don't watch news. We're not interested in news. We feel that news will only serve to really complicate your trading and mislead you. So if you're an investor, I would always say, yes, you need to know about news. But if you're just trading from anywhere from 3 to 5 to 10 days, there's really no concern to really know what's going on, because it's all going to be in the price. Now, right here, the dollar yen was telling us to go short. But if you learn to use our proprietary entry technique, guess what? You would never have taken this trade, and you wouldn't have gotten hurt. Once again, to the layman, they would have said, boy, that was a terrible signal, Steve. You guys really don't know what you're doing. You said to go short the dollar yen, and then some news came out, and look what happened. You got killed. Actually, no. We never even took the trade, because using our proprietary entry technique, we never would have even been in this trade in the first place. So the market kept us out of the trade, not the news. And then most recently, the Canadian dollar, we had a signal right at the end of October to go short, as you can see here, and in 1 day we made a quick 137 pips. Now, just to show you about some current trades we were in, we are long the Swiss franc, we're also long the Canadian dollar, and we are short the euro yen. I don't have charts for those right now, but we are in all those trades just in case you're watching, and we are currently in the trade. We have paper profits in all of them. Most of them, if things go against us, we're going to just break even. We don't stand to lose any money because we're trading this conservatively. So this is something that, once again, we teach you all these different techniques and all this money management, and it's rooted in simplicity, as I've really tried to focus on sharing with you people. Okay, I told you to remember to not to forget that P&L chart, because I want to show you this. Here's where we had this really nice run up, and then we hit this type of peak in our P&L, and we had our drawdown phase. Okay, now a lot of people who are unsophisticated with trading would say that's terrible. Boy, that's a terrible loss. And most beginners think that way too. As I've said, for trading 34 years, you know that losses come with the game. But if you're trading aggressively, these are the losses you would have sustained. If you're trading the large unit, the large contract, a sophisticated trader would have lost roughly about $20,000 in the drawdown right there, okay? Maybe a little bit too much for some people. Now, we teach you conservative ways to trade. Once again, we don't just have a strategy or a system. These are not systems and say, go out and trade it, and that's it. Do the same rules each and every time. We, once again, feel that's a recipe for disaster because you have to be a part of the process. You have to be involved. You have to know whether you're conservative or aggressive, whether you want to get out at the first exit, whether you want to move your stops unchanged. So we give you all these techniques, and if you used our really conservative approach, taking the same signals, same entries, but just was very conservative, you would have cut that drawdown probably down to about $5,000. Even though your P&L would have dropped about 50%, your drawdown would have dropped about 75% less. So in the end, you're really, really learning how to trade these different styles and different techniques. As I said, most unsophisticated traders will look at a loss as something that they should be ashamed of. As long as you're still consistent, 2 steps forward, 1 step back, that's what really matures a trader into knowing that they've been trading for a while. So you need to know that as long as you're consistent, you're on the right path. It's only when your P&L is kind of going up and down, that there's really no right or wrong, method to what you're trading. You're just pretty much just treading water, and you're not on any path at all. You're just kind of spinning your wheel. As I said at the very beginning of this presentation, things can't be any more simpler than what I just shared with you. Simplicity equals consistency. You saw in those two P&L charts how much consistency there was in this simple strategy. Strategy number 5. Even though we've had sell-offs, if you wanted to, trade the conservative method, you could have done quite well. Okay. So what my goal is to teach you this simplicity, which is really about stripping away all of the things for some reason we've been taught that make us successful. And once we do that, by using some sound fundamental techniques, you will have this level of consistency to your trading that will look like that P&L chart that will have 2 steps forward, 1 step back. Now, I invite you in the end, coming to the end here, we have a question and answer period, but I invite you all to become members of my website, specialisttrading.com. As you can see, I offer courses in stock trading, E-mini trading, and as you saw today, Forex trading. All these different courses come with different strategies, different nuances, but they still use the same basic techniques, the same basic fundamentals that I shared with you today. Now, if you decide to become a member, here's what you're going to receive. Detailed instruction, as you saw today. I really give a lot of care, and I really stress instruction. As I said, my trading now has been probably cut to about 2 or 3 hours a day. Most of the time I'm teaching and mentoring and conversing with my students and trying to help them. So I really, really put a lot of importance on instruction, as you can tell with my presentations. We have numerous Forex strategies, upwards of 10. I give you updates and signals on these strategies so that you can know and see if you're seeing the same entries and exit points as we are. Remember, we are not really a trading room. I really feel that trading rooms do not add to your success. They take away from it because you just learn how to trade off someone else. I give you all the tools and information to construct how you want to trade. And I stay with you every step of the day, every step of the way. We have weekly webinars. All the webinars go over the trades and different lessons that we have for trading each week. Everything is archived, so you can watch and learn at your own leisure. And also, once you become a member of Specialist Trading, you are a lifetime member. This is not something where you have to sign up each month and hope that you get more and more information as it goes along. You're a lifetime member with me. As I said, I'm there with you every step of the way. Now, if you want to become a full member, our courses run anywhere from $2,500 to $5,000. But if you're interested in just purchasing the strategy I talked about today, this is strategy number 5. We have an E-mini, or I should say a mini course access. This is the instant course access to strategy number 5. As you see here, all the things it comes with. Now, this course regularly runs for $495, but for the FX Street attendees, we've dropped it down to $345. This includes all the rules. You have instant course access, detailed instruction, 9 videos. You get the rules to entry, exits, and stops, which I just talked about, and I showed you the P&L chart. We have 1 year of free trade signals. These are signals we give you on a nightly basis when the trades occur. You have a PDF of the rules. We have 1 year of free weekly trade lessons and personal email access with myself. So anytime you have a question, something doesn't seem right, you can email me, and I'll get back to you as soon as possible. Now, I want to tell you about a place to go to get more information. This is a great link that FX Street has assigned to us, and I really appreciate what FX Street has done. They've constructed a mini site just specifically for our strategies and for more information about specialist trading. Now, this is a little bit, I want you to copy down this link if you can to go to this particular mini site here, but we've kind of shortened it for you to make it a little simpler so that you'll be able to go there really easily without copying all that down. I know I want to get to questions, so if you copy the lower one in yellow, you'll be able to go to this mini site that FX Street so graciously has constructed for us. Okay, I hope you copied that down. Once you copy it down and you click on that link, here's where you go to the mini site, which explains a little bit about myself. It tells you about my strategies, and then if you want to click on, you'll get more course descriptions, and you'll be able to purchase the course. Okay, so this is all provided through FX Street. Thank you to the good people there. And as I said, we would reserve the last 15 minutes or so for questions. Once again, if you have any questions, please call my associate Brett at 310-844-7220, or you can email him right here at brettm@specialisttrading.com. Pro Trader Strategies is another site that we're in conjunction with, and you can purchase the strategies as well. But you must call for a limited time to get that special deal of $345 for the strategy we went over today. Okay? Carlos says, Steve, if I purchase the Forex strategy program, do I get the lifetime membership? When you're talking about the strategy program, Carlos, you're talking about strategy number 5, the one we just went over, because you basically, if I go back here, here's what you get with strategy number 5. Instant course access, detailed instruction, the 9 videos, and that's yours. You get the rules for yours for lifetime, but you'll only get 1 year of the free trade signals, okay? And by the end of the year, you should be able to know how to spot them on your own anyway as well. And you get 1 year of free weekly trading lessons, okay? Now, if you decide to become a full member, which is where you get access to all of my strategies and all of my information, yes, you get that for a lifetime, okay? But this is what you get if you only decide to purchase our mini course, which is the strategy number 5, okay? I hope that answers your question. The Forex program, which is our entire suite of all our different strategies, yes, you are a lifetime member. As I tell my students all the time, I've been trading for 34 years. I don't have any plans on stopping now. I plan to be trading for a long time, so I'll be there with you every step of the way. Okay? Steve, there are about 20 questions asked above. Okay, I'll try to get to them. Let me see. If you don't mind, I'm just going to go back to the phone number so many of you can see that. It says, Steve, this strategy works most effectively on a trendy market, right? Yes, it does. It works, and I know that a lot of people are always asking, well, what do we do when there's a choppy range market? Well, when there's a choppy range market, the great thing is the buy-sell line will keep you out of trouble. I'm not going to guarantee that it does all the time, but many times it will keep you out of signal. Now, as you saw when we had that real big drawdown on our P&L, that was because a couple of the markets, the euro-yen and the euro-dollar, were in tremendous range markets for that particular time, and we got whipsawed. But had you used our conservative version, and you would have not gotten hurt at all with that at all. So it all depends on how you want to be trading and also what type of account you have. Okay? So the strategy is really geared towards trend trading. As I said in the beginning of the presentation, the Forex markets have the best trends available, so let's take advantage of them by using this particular strategy. Someone says, any special pricing? Yes, there is. For the mini course, there's a great special price. Once again, that usually runs for $400 or so. In the $400 range, we've cut it down to $345. Okay. Please call up for any more specials that we have. You can speak to my associate Brett. Let me see. How do you determine your stop loss and how many pips is typically? Okay. Once again, Mike, that's a great question, but if I gave you the stop loss, I would be pretty much sharing all the rules with you. All I can say is that our stop loss is basically determined off of price action, not off of any particular calculation. And plus, we give you also conservative and aggressive stop losses. So once again, you can decide. And we also teach you techniques on how to move your stop up. Okay? But this all is within the course. It wouldn't be fair to me if I gave you all the rules for people who have paid thousands of dollars for the same information. Okay? Another question from Jack says, if the 50-period moving averages goes flat, then what? That's a very good question. I talk about this. You always want to look for either a nice sloping upward 50-period or a nice downward sloping. Those will give you the best signals. Okay? Carlos asked, Steve, by looking at your P&L chart, which strategy was most effective going on the positive side? Well, it all depends how you want to trade, Carlos. As I said, it depends if you want to trade aggressively or not. We have another strategy, strategy number 6, which using the aggressive version hasn't done as well. But if you use the conservative version, it's done tremendously well with very small drawdowns. These are all part of the large package. You get all of these different strategies. So it all depends. Each one is a different type. Each one, strategy number 6 does not use candlesticks. It uses an indicator, and it's a great strategy. That also has a short currently in the euro yen, and we're doing very well on that particular trade. How many weekly webinars, Steve? Well, I give a weekly webinar for all of the different courses. So like I will be giving a webinar this week, at the end of this week, for the Forex stock and for the E-mini. So each course gets a weekly webinar, and I'll go over questions that you may have, that you emailed or that you asked. I also go over particular trades, and as well I go over lessons in different techniques and ways to trade that may not have to do with a trade that took place that week, but just something that can help you with your trading. A different technique for entry, a different technique for exiting, and things like that. Okay? But they're great learning tools. And plus they're archives, so you can go back to them. We have tons of lessons that you can use and go back and watch at your leisure. They last anywhere from 15 minutes to a half an hour. Okay? Let's see. Steve, if you get several engulfing bars on one day, do you trade all of them, even if they are all dollar related? Or, in other words, on the euro, USD, and the Australian dollar and British pound, and that's a good question. In other words, which one do you take? I personally would say only take one or two. You can take all of them if you want. When we teach you through the weekly lessons, we teach you how to decide which ones to take and which not, because some may have better setups than others. And once again, that's another thing for the members. I can just tell you that some bullish engulfing patterns have better patterns than others. We don't want to see a large second day, because many times if you're seeing a bullish engulfing pattern and the bullish bar is really big, well then you don't want to take that trade, because it's traversed most of the distance you want it to go in the first place. So you're looking for different techniques and different edges, and that can help you decide which one to take. Okay? Because not all bullish engulfing patterns and bearish engulfing patterns are alike. You may get them in a number of different cross currencies on the same day, but some may be better setups than others. So I teach you what to look for. Okay? So this can cut down where you don't have to trade each and every one. I hope that answers your question. If the entry point is not hit the next day, do you then abandon the trade and wait for the next one? Yes, that's a good question. Most of my trades, most of my strategies call for entry the very next day. And that's it. If you don't get that into that trade the next day, or the next bar if you're looking at it intraday, if you don't get into it, then you negate the trade and you look for another setup. Now, all the trades on the result page that I showed you earlier were actual trades that we entered. But there were a number of trades that we never entered. There were proper setups and everything happened, but we never got to our entry point. So this is also something that I teach you. Now, we have a number of entry points. You can use the standard entry point. You can use the more aggressive. You can use a more conservative entry point to cut down on your risk. Okay? Boyke asked for the link again for FX Street. Okay, let me just go back to this. This is the link to the microsite that FX Street has provided for us. You can copy either that down. We just minimized it so that we didn't have to take too much time waiting for people to copy it down. This is the same exact link right here. We've just shortened it. But this will take you to the microsite that FX Street has provided for us to get more information about our strategies and about our pricing and about our company as well. Do you cover being above the 50-period simple moving average on 1 hour and below it on daily? That's a good question. And that I can share with you, because I've spoken about that in the past. A lot of traders, just to clarify that, they like to look for confirmation from the higher time frame in order to decide what to do on the lower time frame. I personally have nothing against that. I know a number of our students and members swear by that type of trading. I personally have never found any consistency in that, so I do not use it. If I'm trading an hour chart, that's all I'm looking at, the indicators and what the market is doing on the hourly chart. I don't look for confirmation in a higher time frame. I know, as I said, there are tons of traders who swear by this technique. I just have not found any consistency. There's so many times where I waited for confirmation and I missed a trade waiting for it. So I would rather just trade what's in front of me. Okay, That's my particular style. And I give my students the option as to whoever they want to. Why not the 50 exponential? This is another thing I can cover. There's nothing wrong with a 50 exponential, just like I explained in that last technique. In fact, I would rather use 50, even if it was weighted, just as long as you use something. The moving average is basically just saying this is the average from the last 50 bars, okay, which is a good time frame. It's a good span. I just want to know, are we trading above average or below average? That's all. Now, if you want to use the exponential, that's fine. If you want to use a simple, the way I do, that's fine. If you want to use a weighted, that's fine. But just use something. I would even say if you're stuck on a Fibonacci number, if it has to be a 54 or 55, if it has to be an 84, okay, but as long as you use something, because you want to be on the right side. There's so many traders that said, boy, I got killed today. I went long, and I said, well, where was price in relation to the buy-sell line? And then they punch up the 50-period simple moving average, and they see that price was below. So you just want to have something that will, before you take the trade, just assure you that you're in sync with the current trend. That's all. Okay? So I don't mind if you use it's not a magical simple moving average. You should use something, some moving average that will help you be on the right side. Do you enter the trade with the next bar after the engulfing candle? Yes, as I said, we enter on the next bar, but I can't get too in detail because we have different entry methods. As I said, sometimes it's not on the next bar because if you're using a conservative method, you will wait a little longer. If you're using a standard method, it usually is on the next bar. There's a number of different ways. As I said, I do not teach systems where it's the same thing each and every time. I have taught systems for other companies, for other people. But in my own personal trading, I don't trade systems. I trade strategies. And strategies are basically about 75% rule-based with 25 or even 30% given to discretion. Now, the discretion is not an intuitive feel or just a feeling you have. The discretion is being able to use different techniques, aggressive techniques, different entries, different stop losses, so that you can feel more comfortable, so that you can be a part of the process. So that's really what we're focusing on. It's not where we're saying you have to do the same thing each and every time. And I provide you with all this content, all this information that I've accumulated in over 34 years, okay? I'm really sorry if I've skipped anyone's question, but we're getting real close to the end, and I don't want to take anyone's time if they're coming up. So I promise you, I will answer any question you have if you email us or give us a call. I'll just take this last one. So, Steve, so you take positions against the bigger trend. In other words, the bullish trend, you don't just buy dips, you buy or sell tops too. No, in other words, if I'm looking at a daily bar and price is above, that's the only thing I look at. I'm not concerned with what the monthly bar chart is doing or the weekly bar. Okay? That's really it. I thank you so much. Once again, this is a great deal we have. Just to go back real quickly and show you, because I know some people were asking, if you're concerned about being a full member where you get the full suite of all of my strategies, all of our tons of information, that roughly can run from $2,500 to $5,000, where your lifetime membership with everything. If you just want to get this last course, here's all the information you get with strategy number 5. That's where I went over all the rules and showed you the P&L and showed you the bearish and bullish engulfing patterns. Thank you so much for joining us. I'll end here just by leaving the number up just in case you want to contact us if you didn't get your question in. Thank you so much. Thank you to FX Street, and we'll see you next time, okay? Bye-bye.